My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to just make friends? I'm just trying to make a little money. My job is not just to entertain you, but to educate you too. So call me at 1-800-743-CNBC. Unless you're a bowler, you have no idea what the heck it means when I say this market has got some of the best pin action I have ever seen. I can't take you to the lanes. I can't form a league with you. I can't even share my psychedelically laced bowling shoes with you. But given today's action with the Dow climbing 128 points, S&P jumping 1.25%, NASDAQ falling 1.36%. By golly, I'm going to get you a shirt, a ball, and a couple lanes and get you rolling tonight. That's because this market is bowling nothing but a ton of strikes. A couple of spares maybe, as the head pin slashes into the kingpin and sends all the others scattering. I often view a really positive market as a bowling frame because stocks go flying around on good news, just like when the one pin knocks into the others, so you get that maximum points on a good roll. Today we had more pin action than the Plaza Lanes in Madison, New Jersey. And I felt like it was like the old days when I donned my gym bowling shirt, put on my shoes, and brought my own ball, play with style. What drove the action? Let's go over some of the strikes this market rolled, because this one felt pretty darn perfect from start to finish. No, check that. From before the start to the finish, because much of the positive pin action started overseas the night before, where we had become so used to getting bad news. That's right. Before we even opened for trading, you knew it was going to be a good one because of the pin action emanating from the number 50.3. That's the number China's industrial PMI, or its gauge of strength, hit last night, and the number the Eurozone came out with. Yep, that's an odd coincidence. But remember, 50 is the fulcrum. Anything north of 50 is an economic expansion, and that is good news. Anything south of 50 is contraction, and that is bad news. Given that we expected contraction with both numbers, the gains, they were instantaneous. Bye, bye, bye. For months, the worst performing stocks have been the big mining, minerals, and metals companies, in large part because China's knee-deep in all of those things. And you know what? For a while, they were running lean, but they don't need any of this stuff. In fact, the smart money, meaning those hedge fund managers who love to talk about their book and sound as smart as whips, have been knocking and shorting everything that can possibly be used to build anything in China. And that's been going on for months now. Don't get me wrong. It has been a terrific trade. But when you get any number, but particularly this number out of China that we got last night, and it surprised the upside, well, get out of the way, because the pin action, it is phenomenal. Look no further than Caterpillar, which has been among the worst performing stocks in the Dow. A couple of weeks ago, Jim Chanos, a hedge fund manager known for short selling, he came to CNBC's Delivering Alpha conference and said his favorite short idea was Caterpillar, because the big engine and earth-moving company had placed such a big bet on China and had come up snake eyes. Chanos stressed that the super cycle, yes, the big commodity super cycle plays, the coals, the steels, the aluminums, lead, tin, iron, they were kaput. Secular decline. Curse words when it comes to stocks. Now, I have to tell you that I'm not disagreeing with Chanos. I think these mineral plays, which peaked in 2008 when China was still smoking, doesn't make much sense at all now. And they've been the bane of my existence when it comes to a charitable trust. I think Cat makes the best machines, but sadly, Cat not executing. However, today, for once, if you own those stocks, you didn't roll a gutter ball. In fact, Caterpillar led the group along with Cummins, which reported a terrific quarter the other day. So many bowlers were caught leading the wrong way. These are short-selling bowlers that they might as well have been knocking back some long necks in their stocking feet. You know, your bar behind the lanes. I think I saw the Bears roll a couple of balls over the gutter into the next aisle. Funny guys. Europe's been such a disappointment. But when you see an expanding purchasing managers report, you buy everything from the European banks to American-based companies like the autos. They rolled strikes throughout the whole darn day. Global strength pulls up more than the minerals, though. It gets the oils to roll strike after strike after strike like machines. How powerful was that move which keyed off the price of crude, which jumped almost $3 today? How about this? How about the fact that Exxon, the biggest of the oils, reported a terrible number. Yet the whole group, save Exxon, oh yeah, and another terrible reporter, Royal Dutch, soared in fabulous fashion. Exxon and Royal Dutch.
The House of Pain.
The rest of the oils.
House of Pleasure.
It didn't hurt that Pioneer Natural Resources rallied $19. What kind of day was today? On news of better production than anyone thought, stemming from the old-fashioned Permian Basin. I mean, that thing's as old as time. Any oil with any Permian exposure got struck by tremendous Pioneer head pin action. Contra Resources, we told you it'll be like that one, $5.43 up, finished at $95.12. EOG jumped $6.58. Even lowly worm Chesapeake reported a good number, a strike right down the middle for once. And the stock folded $1.65 to close at $24.95. But if you wanted to see a bowler's paradise, a perfect game, I looked no further than the 300 that the weekly unemployment claims roll. The strongest number since 2008. Given that the Fed said it's on hold just the other day, this number was perfect. Gave you confidence the economy was indeed getting stronger, which could mean earnings next quarter will be better than the ones we just already been seeing. Even though interest rates did go higher, they couldn't damage the frame. Plus, at 10 a.m., we got our own PMI, and it was much better than expected. When the economy's humming, what flies? Well, the transports go flying. They're knocking down pins left and right, and we saw that key indicator rally massively, which was terrific news for the market, as it had been pretty darn doggy of late. Not confirming, so to speak. The action in the rails, which had been stalled because of disappointing earnings from the big coal transporter of Norfolk Southern, was especially astonishing and heartening for us commerce-loving rail people. The low claims and high PMI sent the retail pins scattering because when jobless claims come down, spending goes higher. So the money circled back into Starbucks, VF Corp, Under Armour. Also piled in one of the most amazing first day Popeye said we had in ages because it wasn't a .com or anything. Sprouts Farmers Market. Priced at 18, opened at 35, and then rallied further to 40, more than doubling right off the bat. What a command performance. One that stole the show from Whole Foods, which reported its usual excellent quarter, did virtually nothing. Low claims also means fewer loan losses for the banks, and that huge group rolled its best game in months. And it looks like J.P. Morgan's finally breaking out to much higher levels. Pity those who sold it when Jonah was swallowed by the... when Jamie was... when they had that whale problem. But if you really wanted to see pin action, look no further than the social, mobile, and cloud space after Yelp shot the lights out with a number that got people to recognize that there's plenty of money to be made in the mobile internet. In fact, as I told my friend buddy pal David Faber, Yelp may be the new key to this market. Yelp rallied $9.70 and inspired a $16.47 roll in Google and led Facebook to once again try to mount that dastardly 38 level that the failed IPO was priced at. Meanwhile, Salesforce.com, symbol CRM, the true social mobile and cloud kingpin, continued its relentless drive toward its all-time high, stopping just $2 short of that goal. Anything that even looked like Yelp bolted higher today. Who looks like Yelp? I mean, well, you know, how about a couple of sites that help you find your dream house? Price it right. Trulia rallied $7.27 to $44.53. Zillow zoomed $10.95 to finish at $84.83. There must be a million short sellers in these names, and I got to tell you, their necks are hurting. Marketo, a company we have on tonight, pulled a pretty good game, too. Finished up $1.58 to close at $32 on top of a fabulous move yesterday. And after the bell, LinkedIn, the social networking website, which had rallied 9 points in the regular session, tacked on another 10 after reporting a magnificent quarter. Frankly, the action was breathtaking, along with so many different lanes that swept up all kinds of companies, including some which have thought to be disappointing. Remember, Federal Express wasn't that supposed to be bad? It rallied another $4. Amazon jumped $4.35. That quarter was wildly panned. Netflix increased $4.64, and not just because Breaking Bad is going to start August 11th. You got to fill yourself in if you haven't missed, if you missed all the other seasons. It was one remarkable session. It reminded us still once more that the brilliant minds who keep saying you can't buy any stocks until we see real revenue growth, not earnings, or those who preach endless caution as they prattle on about tapering, just keep leaning the wrong way. Pessimists keep getting blindsided. The prudent bears continually smacked by stampeding bulls. Here's the bottom line. This month of August started off just like the last month finished, okay? I mean, just remarkable. With a roar, it's as if the whole league bowled above its head, where 9 was an embarrassment and a spare wasn't much better. It was a confirmation, once again, those who believe things are better, like I say, they're rolling 300s. And those who think things are worse, guttered over and over and over again. Who knows? The Bears rolled so badly today. The only answer, frankly, for those of us parents out there, is to bring the bumpers normally reserved for the 8 and under crowd to the Bears' Den, because they can't play to save their lives. Yes! Nate in California, please, Nate.
Jim, Nate bringing you a big California booyah.
Yo, what's shaking, partner?
Visa is what's shaking. Stock's obviously done great over the last 2 years. A lot of things have happened. We got Durbin Amendment, we got lawsuits, all that good stuff. Stock dipped yesterday, and I want to hear from the man. Is it speculative or is it warranted?
The money's all going to MasterCard right now. You know what? I'm going to take the other side of that trade. I think the Visa would spend some time in the wilderness today in these quick intraday bear markets, as I call them. It's now ready to roar again. I think Visa had a good quarter. It's very well managed, and I like Visa. May I go to Tim in California, please, Tim?
Hey, Cramer, Tim here. Wondering about Taser, TASR. They reported upbeat yesterday, and I just wanted to get your take on it.
Yeah, I thought the quarter was fine. We're not in that kind of Taser market. We're in a market where really great companies that report good numbers. I'm talking about the 3M ilk. They go higher. The Tasers, too speculative for this guy. In true Leo fashion, August came in like a lion. The market roars on. And the pin action, it's downright amazing. Stay with Cramer.